Hello and welcome to the GoNoGo Show here on February 2nd, 2023. My name is Tyler Wood and I'm joined by Alex Cole, co-founder of GoNoGo Charts. How are you doing today, my friend?
Doing well, thanks. How are you?
I'm great. Chilly up in the Northland, or Southern Canada, as we like to call upstate New York. But markets are heating up. Let's
Absolutely.
dive right into our cross-asset heat map and look at what trends are happening across the asset classes.
Yeah, we've seen some movement over the last couple of weeks, that's for sure. And a big day yesterday, followed by an open higher, and still doing well today. You can see the top panel is the equity markets represented by the S&P, and we've been in strong blue go bars now for about 8-9 days, uninterrupted go bars. Treasury bond prices also in a strong go as well. Commodities have pulled back a little bit, showing some weakness. But still in a go trend. The dollar, of course, what do we need to say about that other than it's been in a no-go and it's still showing strong purple bars?
Mm-hmm.
And then we put Bitcoin back on down below for this show, and we can see how Bitcoin has really popped lately as well, showing strong blue go bars for several bars now. So some real blue across the maps.
Absolutely, a lot of new shoots coming up. Constructive evidence of the end of the bear market and the beginning of the next bullish phase of the markets. Let's take a look at our cross asset components. Let's dive into the TNX, the 10-year Treasury yield, as we always do. Big announcement from the Federal Open Markets Committee yesterday. Only a quarter point hike, but more commentary about the need for continuing rises in the Fed funds rate. Obviously, had some weakness in the markets yesterday afternoon and then immediately popped back for a very strong close on the day. Are we able to reshare that chart screen, Alex?
Yeah, Horace, sorry about that. We just lost it for a second. I'll get it right back now.
No problem. As we like to say at the GoNoGo Show, we are not here to predict what is going to happen with the Fed or with earnings, any given company. That's a fool's errand to speculate. But there is a tremendous amount of information in the market itself. And even if we could fast forward in the time machine and know what's going to happen at the next several Fed meetings, that doesn't tell us how the market will interpret that information.
Yeah.
Is a quarter point hike big, small? That's really up to investor sentiment and behavior and emotions at the time. So from an objective trend perspective, I see some no-go on Treasury yields.
Yeah, Treasury rates, you can see that we've been in a no-go trend predominantly since the end of last year. And we saw some support here at these lows. We saw it tested and held again here. As prices rallied slightly, we saw the GoNoGo oscillator come up to test the zero line, where the beginnings of a GoNoGo squeeze formed. But you can see that the oscillator broke back into negative territory out of that small squeeze. And that's giving us a no-go trend continuation icon, this red circle here, which tells us that momentum is back again on the side of the trend, which is in this case, of course, a no-go. And you can see that we've gone back to strong purple gut bars. And on an intraday basis, we've broken below these support levels. We'll have to see how we close, but we're certainly still looking bearish on Treasury rates.
Absolutely. And let's take a look at the correlation to the S&P 500. Let's pull up a chart of the SPY. Obviously, big upside day yesterday, strong close. And here on the daily basis, we're in a confirmed go trend. But let's jump out to the weekly. As we've always told our listeners, right, while we are in that current bar, that current period, it's still in play. So we're seeing the amber neutral trend conditions here on these last several weeks in this rally. But this week is not over. Today is Thursday. We're seeing strength in the markets today, and we'll see how we close tomorrow. That final bar could, in fact, end the period in a different trend condition, changing colors while it's still in play. Once the period is closed, obviously there's no alteration to the charts, but I like the trend line you're drawing and where we are positioned above it. Talk to us about this chart, Alex.
Yeah, absolutely. And you can see that we've been struggling with this zero line since the no-go was in place. And this is the highest we've been into positive territory now since late last year. So we're now testing or even, breaking above this downward sloping trend line. We saw a higher low here. We look like we've even on an intra-week basis, we'll have set a higher high on an intermediate term. You can see that here, referring, of course, to this most recent high back in the end of November. So we're really starting to now see some price action that is threatening the no-go trend that's been in place. We've seen that for the last 4 weeks with amber go fish bars telling us that there's a lot of uncertainty as to whether or not this no-go trend can continue. Well, now we seem to be clearly above zero on the oscillator, breaking into more positive territory, price moving above this downward sloping trend line. And like you said, if we move higher tomorrow, or we may well see that bar turn to a go color. But in the meantime, definitely some constructive activity on price. And you can see that too on the daily. When you look at the daily chart, you can see how we're above the recent highs. There was a support level here, and we've now broken above it on yesterday's close, and we're continuing higher today.
You know, I just wanted to point out, you mentioned the highs of the end of 2021 in the GoNoGo oscillator, and so momentum reaching highs that we haven't seen in 14 months.
Yeah.
This time is different in terms of its comparison to the recent relief rallies through that bear market territory in 2022. So it's been a long while. We've gone through a lot of destruction, and this is a lot of constructive evidence for the bulls.
Yeah.
Alex, let's switch away from the S&P 500. Let's talk about the US dollar. We use the ETF ticker UUP for the dollar index. And so we're in a strong no-go trend, obviously, given some tailwinds to risk assets, both here in the US and abroad. What can you tell us from a trend perspective right now?
Yeah, just like you said, strong no-go trend on the dollar. And we've seen trend continuation on yesterday's bar. So you can see how the oscillator staying in negative territory for most of this period. We rallied to test the zero line as we consolidated at these lows over the last couple of weeks, but we've been turned away, and we're back there again today on today's price movement. But as long as we stay below the zero line and keep finding resistance at that level, we're going to say that there's trend continuation to the downside in the dollar.
And let's just talk for a minute about those who might trade to the short side. If we're talking about trend following in a short trade, tell us how we might use GoNoGo charts in that direction.
Yeah, absolutely. In much the same way as you'd use it in the go direction, a no-go trend tells us that we're in a bearish environment. And so what you're looking for is these opportunities to participate in the trend, whether up or down. And you can see that by the trend continuation icons. Those are the circles that here are red because we're in a no-go trend. They're green when we're in a go trend. But those tell us that the trend that is in place is likely to continue because we've got resurgent momentum in the direction of the trend. So in this case, if you're somebody that is looking to play the short side of the dollar, you see that no-go trend identified initially. And then each time we see continuation, you could look at that as an opportunity perhaps to continue to scale into that position or to participate if you weren't already in it. But it's a relatively low risk opportunity to get into the trend because we're saying that momentum is in the right direction.
Absolutely. Confirmed trend and then a momentum resurgence. That's the underpinnings, the keystone, if you will, of the trend following arch, looking for that confirmation. Alex, let's turn our eye to the chart of gold and talk about how that has regained a bit of its luster.
Yeah. So the opposite image, really, you can see the go trend identified, and then all of these opportunities to take part as we see momentum finding support at the zero line. Remember, that's the important part with GoNoGo oscillator. We know that when all of the combined blended inputs to the oscillator are in their neutral territory, the oscillator is going to fall to the zero line. And as long as that zero line holds as support, we can say that the trend is likely to continue. And that's what we saw here as price moved slightly higher and consolidated those initial gains. Now we've moved higher again. We can see something similar taking place. We're moving sideways really over the last 10 days or so, and that's caused the oscillator to fall to the zero line, but so far find support. Not a great day today. We're going to look to see if these levels hold. We've got some price levels that should act as support, and we've also got the zero line here on the oscillator.
Absolutely. All right, let's get under the hood a little bit of the S&P 500. Let's take a look at our sector rel map. And again, for those of you who are new to the GoNoGo Show, we're talking about the trend concept. So what we've been looking at all of those single security charts that gives us that blended weight of the evidence approach for identifying trends in either direction and the strength and veracity of those trends. Now we're going to take that whole composite information, and instead of looking at the price action itself, we're going to turn this into a heat map, and we're looking at the relative ratio of each sector of the S&P 500 against the benchmark. So let's walk it top to bottom through our growth sectors and all the way down.
Yeah, I mean, it's just much more clearly now a more aggressive picture, right? We've got much more of a risk-on environment. You can see how this map has changed over the last few weeks. We were being dragged down by the growth sectors, and you saw communications come into a go trend, then discretionary, and finally technology. And we were being led by the defensive sectors, healthcare, staples, utilities. And now we've seen that flip, right? We've got the technology, discretionary, and communications sectors all in relative go trends to the base index. And our defensive sectors, healthcare, staples, and utilities, all in relative no-goes to the base index. And we've got some rolling over in the middle here, these more sort of industrial sectors, the industrials, materials, and even energy and financials as well, falling out of go trend. So this movement back higher in the equity markets is really being driven now by our growth sectors.
Yeah. Now, my colleague at the CMT Association, David Lundgren, talks a lot about the momentum crash. And so for those of you who are hearing that term, a lot of people assume that it's at the top, right? You see a momentum crash. What we're actually talking about is what happens at the turn. So at the end of a bearish cycle, where the things that have been lagging, we realize that market's not going to zero. Those growth equities are going to survive. And so what we're seeing right now is that momentum crash, where what was leadership through the bear market sort of takes a pause on a relative basis to the index itself. And what we're seeing is those growth equities that were so beaten down have the greatest recovery to be made, right? And we're going to look at a bunch of individual names. I think that it's very dangerous to say this time is different, but we do know that the participation of traders in this market has changed since 2020. And so a lot of those mega cap names that were so destroyed, the ARK Innovation ETFs and a lot of the growth stories that were really unwound sharply through 2022, those are the areas of the economy that are being traded heavily and had the most to gain. So what we're seeing right now in terms of that relative performance of technology, communications, and discretionary is really important to keep an eye on. But I'd also keep our eye on that middle of the chart. What was leadership through the bear market, things like industrials, materials. We've seen a lot of strength even in financials and energy through the bear market that could show up to be our leaders in this next bear phase. So Alex, let's dive into the individual names, starting with one of our favorites, Beyond Meat. I mean, it's about lunchtime, right? Let's not eat a burger. Let's eat some beans and vegetables in a patty.
I love this chart. I actually was looking at this one this morning, and if you look at the size of this base and the resistance that was at these levels, that's what excited me when I saw then the go trends emerge with some confirmation. Remember, we can get whipsawed from time to time in technical analysis, but we want to see some confirmation when we see a change in trend. And it didn't really happen this time. The oscillator quickly broke out of a squeeze in the wrong direction back into negative territory. Now, this time we had a significant break of the oscillator, heavy volume, driving into positive territory when this go trend was established. And then we had a pullback, but we found support this time at 0 for the oscillator, and that allowed then the go trend to persist. And what we've got now is last week we had an intraday break of these resistance levels, but today we've got a very, very clear break now higher. We're up about 23% today since this idea went out this morning, and you can see how we gapped higher, and we've just really raced off to set a new high, now clearly above the resistance levels that we saw from the pattern.
So this is in the consumer staples sector, which is underperforming the index, right? But there are still winners within those underperforming sectors. And so it's important to do our work, not just to the sector level, but to also be able to distinguish leaders and laggards within the industry groups of the sectors and then individual names within those industry groups. So Beyond Meat, interesting company to keep an eye on. Alex, let's turn our eye to Caterpillar. Caterpillar, John Deere, a lot of the cyclical sectors of the industrial economy have shown a lot of strength through the bear market. And Caterpillar itself has been in a pretty remarkable go trend here on the daily basis.
Yep.
Tell us what we're seeing in terms of that counter trend correction right now.
Yeah, I mean, again, you need to have your complete view of the technicals so that you can make decisions in real time that make sense and that are according to some sort of discipline. And what you might be looking at now, if you are somebody that's held Caterpillar for some length of time, is how this correction against the trend, we want to see how strong that is. And you can see that we had a counter trend correction arrow here at the top. We've moved to aqua bars. I can see some natural levels of support here that were highs during this consolidation that we're now testing. We fell to that level previously, and now we're testing it again. But what's concerning, if you look down to the bottom of the panel here, is that we are breaking below zero on the oscillator on heavy volume. So there is a little bit of a reason to be concerned here as we move away from the most recent high.
Absolutely. So our trend following rules, right? It's up to each individual to decide what their risk tolerance is. But we've got multiple points on this chart where we've seen correction against the price trend, and now we're seeing negative momentum on heavy volume, which really could be a threat to those overall trend conditions. Let's take a check-in on Sociedad Química y Minera. My favorite. SQM is the ticker. Constant chatter on every radio station, every news network about electric vehicles and what's happening. Alex, let's bounce this out from the daily view to a weekly or even monthly chart to take a look at that very long-term trend in lithium mining company in Chile.
I was just waiting for you to give me the ticker because I wasn't going to try to either pronounce that or try to spell it in the search box. But yeah, SQM definitely talked about a lot. It's such a topical, electric vehicles, such a topical thing. These obviously the guys that make batteries, but this is the monthly chart, and you can see that we are, overall, this is a go trend, and we are finding support at the zero line. If we drop this down to a weekly, you can see that we've been in a fairly strong go trend, which was threatened recently, but is now back in place with the oscillator breaking back into positive territory. So some good signs on these long-term charts. Now, obviously, there's a lot of resistance overhead. We would love to see price break above these levels. If you look at it on the daily, it's very, very choppy, but it's trying once again, having come out of this no-go correction, strong blue bars, positive on the oscillator. So a long-term trend, perhaps just waiting to sort of continue or just needing a little bit of a push to get back to its sort of upward movements.
Yeah. In a recent conversation for the CMT podcast, Fill the Gap, we were talking with Patrick Kent about these opportunistic funds that he runs for Newton Investment Corporation, which was the old Mellon Bank. What he talked about was that thematic investing, right? If you're talking about very long-term trends and you have a thesis about, let's say, the electric vehicle market, there's a lot of different ways that you could express that investment idea. And using charts, using trend following techniques to participate in these very long-term, long-duration trends is critical. You can't be a thematic investor without using technical analysis. So we've taken a look at a mining and minerals company that's giving us the lithium to produce those EV car batteries. Let's take a look at maybe a shorter-term trade idea. Let's pull up a chart of Tesla. And what we've seen in terms of the volume of trading and the enthusiasm in this market for those big mega cap names, those favorites through the pandemic, stay-at-home trade, the mega cap leaders that led the markets higher in 2020 are really just now recovering from some major destruction. But talk to us about these early green shoots of the Go trend.
Yeah, this was an idea that we put out actually in daily research, or perhaps it was Monday morning's flight path, but we just spotted this fresh go trend for the first time in several months. You can see the persistence of this no-go, and you can probably imagine this as I'm doing it, but you could probably quite clearly see this trend line that's on the chart. If I can get the
Annotations are sometimes not our friend,
doing
Alex.
what I want to do. No. Well, let's just
All right.
imagine it. But you can connect these lower highs all the way through here, and you can see how we were breaking that on color change. So we love to see that. Anecdotally, we know that the GoNoGo trend loves to change color when it breaks important levels, and that's what that is. You see that trend line being broken. We see new go colors, and we noticed that and thought, well, okay, this is the first time we've seen a go in a long time, and it was after a break above zero from the oscillator on heavy volume out of a small squeeze. And nice to see how that's followed through this week. And we're now painting strong blue go bars, and we've moved higher again today.
Now, I know nothing about whether or not it was a good idea for the Tesla Corporation to cut the cost of their cars, the Model S, Model M. We can all read the same headlines, but it's pure speculation for all of us to know whether or not that's a good decision from a fundamental basis on whether or not that helps the company. But what we can do is trust the market to do that research and analysis for us and trade in the direction that the market approves of. Let's stick with the car theme, Alex. Let's pull up a chart of Carvana, CVNA. Our family is not buying up used cars at the moment, but clearly many families in the United States are doing just that. And what a fascinating chart to see that break on the GoNoGo oscillator into positive territory, heavy volume, strong positive momentum that signaled the first trend change, and then a retest of the zero line, and finally a resurgence. Talk to us a little bit about how you would interpret that squeeze and trading in the direction of the break.
Yeah, this is just a wonderful chart because it's almost could be used in any textbook on technical analysis 101. You've got this really beautiful trend line that you could draw straight through here that gets broken. You've got momentum staying negative under the zero line for the entire time that we were in a no-go trend, getting rejected, getting turned away, giving us those continuation icons that tells us that this no-go trend is likely to continue. And then when finally it doesn't get rejected by the zero line, it breaks out of this go-no-go squeeze. We see heavy volume as it rises into positive territory. And then go-no-go trend says, yes, we see enough conditions being met to start to paint colors other than no-go bars. We first start with some amber go fish bars, and then the go colors coming in. And as it's trying to decide and make up its mind, we see the oscillators stay above zero, retest on this pullback, and then we get the go trend with more continuation and stronger blue bars. So, this is sort of walking through what's happening underneath this chart and the market activity, the market dynamics that are driving this. You can really sort of tell the story of what happened at each stage and how buyers were really overwhelming sellers at this point. And now we've raced higher in a go trend. Of course, we are now overbought on the oscillator, so we're going to watch to see if we get a correction arrow telling us we may come back in the short term, but very, very healthy looking start to a go trend. Remember, trends start on volatile moves, right? So we can see this nice strength of this go trend rallying off to new highs.
I still see a lot of black space on the top side of that chart. There's room to maneuver upwards.
And even if there isn't, one of my favorite quotes, don't let the top of the chart fool you into becoming resistance, right?
That's right.
The top of the chart is not resistance.
I think the famous technical analyst's quote was, there's a lot of support at zero for companies like Enron. Alex, in our final minutes of today's show, I just want to talk about a really bifurcated sector. Healthcare had been a leader from a sector perspective, relative performance. Right now, I want to go through two charts. Let's start with the XBI, the biotechs. And as a sector, or excuse me, as an industry group within the sector, we're seeing strong upside performance from biotechs, even while the more defensive managed care solutions companies have really seen some pretty strong drawdowns. We've seen rollovers in those more defensive areas of the market. But within the biotech sector, can you pull up a chart? ALGN, Align, is the medical technologies company. And it's really, this is a weekly view. if we take a look at that from a daily perspective, another great start of a new Go trend. Again, previewing what is going to happen before earnings announcements. We don't have that crystal ball, but we're certainly seeing some of these gaps higher as companies are making announcements.
Yeah. And it's always nice to be in a Go trend when you get that big gap up higher and that move higher, and predated by the oscillator getting above zero and finding support. What caused that? Like you said, there are some fundamentals behind it, I'm sure, but the chart's telling us that this trend is pretty strong.
Absolutely. And our closer today on the short side, let's pull up a chart of UNH, United Healthcare Group.
Yeah, I mean,
strong day down.
Strong day down today, in a no-go, but really, really, really strong today. And that's giving us trend continuation. We're seeing that test of the zero, that break below. We're getting trend continuation there as well, telling us that momentum is on the side now of this no-go.
And as our good friend Jay Woods likes to say, risk management is job 1, 2, and 3 for every trader and technical analyst out there. So the idea of a no-go trend is that we simply avoid those volatile downside moves that none of us can predict, but which we can simply sidestep by staying out of no-go trends. For those of you who are watching on YouTube, thanks so much. Please like and subscribe, StockCharts TV, but you can also check out GoNoGo Charts on YouTube and watch several of the other educational sessions that Alex and I have been recording recently. Until next week, 3:30 Eastern on Thursdays, we'll see you again here at the GoNoGo Show. Thanks so much. Be well.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.